Hey everyone, Alex here at FFMResearch. In this video, we're going to be going over why I've been buying Rivian stock, the price I'm paying for it, what I think about its future prospects, and what I think is currently happening with the stock since it is rising very quickly. Now, before we get started in this, if you could smash the like button and if you could subscribe to the channel, I really appreciate it. Now, let's get into it. Now, the first thing to know is this stock is obviously not trading anywhere near its highs. Its all-time high closing price was $172.01 on November 16th, 2021. The stock, I think, reached midday that day around $180 a share, and since then has fallen dramatically with a 52-week low of $11.68. Now, as I'm recording this video, the stock is trading at $25.24, up over 16% on the day. It is around 1 p.m. as of the recording on July 7th. The stock is trading for around $23 billion market cap. It has been going up like crazy recently and is finally starting to have some momentum. Now let's talk about why that momentum's happening. And I think it's surrounded around a few announcements and a couple other things. First, Rivian has adopted NACS, the North American Charging Standard, also known as basically Tesla's charging standard, what Tesla basically put in their cars, and they have made it open for others. They adopted it. Rivian will be able to use Tesla superchargers with a adapter in the beginning, but their actual cars will have the charging port that Tesla created, the NACS port, and their charging network, the Rivian Adventure network of chargers, will actually have the plug as well to charge Rivians and eventually other cars as well. So that's a huge plus. Getting access to Tesla's supercharger network, massive win for Rivian. In the same basically week, lots of other things happened, including Rivian acquiring ABRP, a better route planner. Now, that was a great acquisition because other than just helping their navigation system and routing to chargers along the way, it's also going to show there's so many users of that app and where they are and when they need charging, etc. And as Rivian builds out the Rivian Adventure network of chargers, it's going to help give them insights on where to place chargers in areas that are underserved, or even just very busy areas that they feel they can take advantage of from all the data coming in through that app. So there's a lot of advantages for that acquisition. I think it was a great acquisition. Next, Rivian beat in its quarterly and production delivery numbers. We know earnings are coming up soon, and they released prior to earnings the production and delivery numbers, which Rivian had a nice beat on, really got the market excited about, which is going to lead to analysts upgrading the stock. And they reiterated that they would do 50,000 cars production, vehicles produced for the year, and the market really liked that. They reiterated their guidance. So that was a nice addition for the announcements. And then finally, Rivian and Amazon announced that 300 of their commercial vans were delivered to Germany. This is a huge, huge update because it is not just delivering vans to Amazon to use in Germany, it's building the infrastructure in Europe. Rivian has the service that they need for those vans there, and it's the beginnings of a global scale as the R2 platform comes online and their commercial business grows. Now, it's also important to note that their commercial business has an exclusive contract for 4 years from the day they first deliver a car to Amazon, which was 2021 or possibly 2022. I'll have to double check that. But basically, once that exclusivity partnership ends, they're going to be able to sell these commercial vans they're building to other companies, and I would not be surprised to see them sign contracts with companies like FedEx, UPS, things like that, especially as they've proven the model with Amazon. And Amazon still has a lot of cars to take from them since they have a 100,000 EDV order between now and 2030. Now, there's also a possible short squeeze on this stock, and I think we're starting to see that happening over the last few trading days because there's such a large amount of shares shorted. The percentage of the float is 13.14%, and this was increased 12.5% from the previous month when we found out how many shares were shorted. So the short interest is huge. And as the stock goes up, these people have to cover, and as they're covering, it's making the stock go higher, which is making, basically more and more people have to cover, and that's a short squeeze, basically. So we could see the stock go up dramatically if the shorts get squeezed and don't have the cash and need to, as it goes up, it's indefinite losses on the way up, where there's limited gains on shorting. So I never recommend shorting a stock regardless of how bad you think the company is or how likely it is to fail. Now, what makes this stock so intriguing is a few things. First, if we're just looking at like what you're paying for the company, well, we know Amazon invested around $3 billion or so at basically an $18 billion valuation. Now, this was a long time ago, and today you're basically getting that same valuation, except the company has more cash on hand. They're further down their production ramp. They have more assets. They have around $12 billion of cash on hand. Amazon owns a 17% stake. I don't think they're planning to ever sell. I even think it's possible down the road they try to take a larger stake, but they have a 17% stake in this company. So 17% of the market cap, you kind of can pretend it's not even there because it's passively being held by Amazon. And then there's a 13% short interest. All those people have to buy the stock. So 13% of this entire company's stock float is going to have to be purchased in the open market by these people when they cover their short. So if you take their market cap around 20 billion, it's actually a little higher now after today's trading. This was as of last night. And you take off the 12 billion cash, you have 8 billion left. If you pretend Amazon's stake, which is about 3.4 billion, isn't there, and the short interest has to buy $2.6 billion worth of stock to cover, you're basically getting the entire company for about $2 billion of market cap when you get rid of the cash, you get rid of Amazon's stake, as in, they're not selling, and the short sellers buy back $2.6 billion worth of market cap. You're getting this company for basically break even, slightly over. It's really, really cheap. You're almost getting them free in a sense. Now, obviously, though, there's risks because the company could go under. But let's just go over what Rivian's doing right first. So first, there's no dealership model. They sell direct. Huge, huge advantage over other automakers, legacy automakers. They get to keep that margin and not split that business off. So it's already a much better business than the typical auto business. Next, the vertical integration. Basically, the more they vertically integrate with hardware and software, the more margin they can capture and the better they can make their product. It's something really Tesla does extremely well, Apple does extremely well, and we're seeing Rivian taking that route, which is amazing to see. Next, building Rivian Adventure Network. We know Rivian's already signed a deal to get access to Tesla's supercharger network, which is going to be amazing for Rivian owners and a reason to be able to buy a Rivian and not buy a non-Tesla EV now that they have access to that. But they want to control their own destiny. They want to be the adventure company, put chargers on the base of mountains and different areas that you might not find a typical Tesla supercharger. So I do think it's really awesome they're building their own charging network. I think in the long run that is going to create extra profits for them and help with brand awareness, etc. So that's another thing I think they're doing right. They're scaling production, the most important part of the business. They're building a team for their driver assistance features, their autonomy. They even have someone, the guy who's leading it came from Waymo. Now, they are doing the most important part, which is they're doing it with limited sensors, the Tesla way, where lots of data collected by cameras and things, and using that data to train rather than building, with extremely expensive LiDAR systems and things that you might find on a Waymo car. Now, they aren't over-promising on autonomy, but they clearly know it's important, and they are working on it in the background and building a team, which is awesome. Next, they have this whole adventure vibe. They have a real brand focus, which I think is super important, and it's the right thing to do, is they're not just making a car for anyone. They're trying to focus on what does their brand mean, and I think they've nailed it. When it comes to service, they're using mobile service. This is something Tesla really has pushed and has been an incredible experience when you do need service, the service coming to you rather than you going to a dealer. It's just a better overall system, and clearly Rivian realizes that and has implemented it and even uses their own commercial vehicles to run that. And talking about commercial, they have a incredible commercial business being built up, and it's tied to a SaaS model, so a subscription model where every time they sell an electric van to Amazon, each one of those vans comes with a subscription to manage the fleet. So Amazon can see all their electric vans, where they're going, how much charge they have, the routes, and they can use the data and optimize. And obviously I haven't had hands-on time with this software, but it's clear to me it's going to play a meaningful role in their commercial business going forward. We know that they're learning a lot from the R1 build, and we know they're going to be scaling with the R2 platform. So they're doing it right. They're starting with a lower volume product, more expensive R1, and then scaling to a much more global product with R2 once they have their learnings and a little more production know-how. Now, Tesla basically has perfected the auto business, in my opinion, and I don't see anyone in the industry other than Rivian following the correct formula. I mean, everyone is doing parts of the formula, but nobody's doing it the same way. Now, you might just say Rivian's just like a copycat in a sense, but the way I look at it is they're smart enough to realize Tesla got it right. And they are taking everything that Tesla got right and they're doing it, but with their own brand identity and their own product. And I think it's the perfect thing they could be doing. It's one of the only reasons I prefer Rivian over every other company is the strategy they are basically going. It determines their whole future. So I have been buying up the stock. Mostly have bought it from $13 to $20 a share. My cost basis is about $15.25 in this account. I do have it in a few other accounts. In about 2 weeks' time, I'm already up over 41%. I'm not currently selling. And the truth is, this screenshot was taken yesterday when the stock was $21.62, as you see on the last price portion. But as you're watching this, the stock is already about $25. In just today's trading day, it shot up even more. So obviously another really nice gain today. Thankfully, I didn't sell. And again, today I am not selling. I don't plan to sell this for years to come because I do believe Rivian is a 10x opportunity, which we will get into in a little bit in this video. Now, there is risk. So I'm not just saying go out and spend your money on Rivian stock. Everyone needs to make their own decision on what finances they're willing to risk. And it's important to know, what risks there are and what opportunities there are in the market. So when it comes to risk, Rivian's burning a ton of cash. They don't currently sell cars for a profit because they're running a factory that's built for a larger volume and they're not at full capacity. So those fixed costs when they run this factory that's meant for a higher volume are eating their margins. Now, they have said they expect to be positive gross margins in 2024 next year. I do think, they could execute on this, but if they don't execute and they don't achieve profitability, they'll eventually run out of cash. So they'll either dilute shareholders to raise more cash or they'll raise debt. And it's possible that they won't be able to at some point or another. And companies do go bankrupt. It's not unheard of. And especially in the auto industry, it is easy for a company to go bankrupt because of how capital intensive it is. So there is clearly risk as they burn cash and have not got to profitability yet. But in my eyes, there's clear opportunity as well. So I do think management will execute on scaling the production and be able to eventually achieve profitability. I think the cash on hand will get them to that point. I expect for the R2 platform that we'll be able to see maybe them raise some money as they push into R2. I think R1 is going to get to profitability before they ever have to raise more money. But for R2, I wouldn't be surprised if they raised more money at that point, sometime 2025, late 2024. And the dilution, the debt they might raise, whether they issue shares for dilution against investors to raise the money or just get debt on the balance sheet, either way, I think it's going to be manageable, and I think it's going to be worth it to scale R2 to a global level. So I started buying this stock around a $12 billion market cap. It's already around a $20 billion market cap, and as of this recording, it's actually now like a $24 billion market cap, but I'm in it for the long run. I think with enough patience, the stock has a chance for a 10x return, especially when you compare it to brands that are equally recognizable as Rivian is at this point. I think it has one of the higher chances to 10x versus equally recognizable brands, if you think of it like that. EVs are still very new, but obviously they're going to dominate for decades to come. This isn't a 1-2 year thing. It's many decades to come of a profitable business and industry being built right now. The auto industry sells around 90 million cars per year, and eventually every one of those 90 million will be electric cars. Today, the largest share of any single company is around 12% or so. Tesla's hoping to eventually achieve around 20% of total production, or sales per year by 2030. They've, targeted around 20 million cars a year or so. The industry is large enough, clearly, for multiple massive companies to win in a huge way. And with Rivian doing what Tesla does by vertical integration, controlling the software, the hardware, they're going to have much higher margins going direct versus the dealership model. So I think they have a huge opportunity to be a multiple $100 billion company. And I think Tesla has a clear opportunity to being a multiple $1 trillion company with the AI they're working on, self-driving, etc. So the question is, how can Rivian 10x from here? And the assumptions are pretty simple. The company's guided to 25% margins long term, 10% plus free cash flow margins. I think they're actually going to do better than that once you include software and different things down the road. I expect 2030 the company will produce around 2 million vehicles per year. This is less similar to BMW, I'd say. The BMW, I think, does a little over 2 million cars per year. At 2 million with a $45,000 average price, it's 90 billion in sales. I could see them getting to a 90, $100 billion revenue run rate down the road about 2030-ish. $10 billion of that would be free cash flow if they're bringing in about 10% or so down to the bottom line. And if you just took a 20 times free cash flow multiple, you get $200 billion market cap. At a $20 billion market cap or so, you basically get your 10x from 20 billion to 200 billion from these levels if those assumptions happen to work out. And I clearly am betting that management will make that happen, and that's why I'm not selling. Let me know what you think of Rivian stock. If you liked this video and enjoyed it, make sure to smash the like button, comment down below, and subscribe to the channel. Thanks.